Well, Wilderness Holdings has released a mixed bag of results. First half earnings coming out. Headline earnings per share up 27% to 8.9 cents, but expansionary plans are being cut down 37%. That's to 36 million pula. And of course, when we're looking at expansionary capital, of course, keeping sustainable capital unchanged. Andy Payne, CEO of Wilderness Holdings, here to explain all the numbers for us. Thank you so much for joining us. So when you look at the numbers, of course, 2011 was a year when you had to take a lot of the pain. You know, you took 11.5 million pula when it comes to impairments, and that has been whittled down to a measly 136,000 pula. When you look at the camps and lodges, I mean, turning from a loss-making position into a profit of 31.1 million pula. So what has driven the performance? When we are looking at the headline numbers, it seems a lot better year for Wilderness so far. Yeah,
no, we're very proud of the last 6 months. I think we've had a difficult trading environment. Our source markets have been weak for a few years. But throughout this period, we've managed to grow. And I think from a top-line performance with 17% growth in turnover, we measure it as, in the region of 10 to 12% real growth, and the balance coming from a favourable exchange rate. So we're very excited about the top-line growth in the organisation. If I come down to the earnings, which is our EBITDA line, we 16% up, but there is an open position on a derivative or on certain contracts in our hedging contracts. So we see. What
exactly are you hedging there?
Well, we're hedging the mix in dollar revenue and local costs. So we have approximately a 38 to 40 million unhedged position every year in the business.
And of course, rand weakness is positive for Wilderness.
Absolutely, yeah.
When it comes to bed night sales, because you talk about turnover being up 17%, but bed night sales down 2% year on year. So explain that to us and what your view is right now when it comes to, in fact, enhancing that number.
I think our bed night sales, that's a real position on our bed night sales. Our normalised position is that we're 1% up. The reality, the normalised position, the way we measure it, is that we take away anomalies when we close camps, and we've got maintenance programs. And so, on an apple-for-apple basis, we're up 1% on last year. Our core product is performing stronger than it has pre-recession, which is fantastic. The product that was first to empty and it's going to be the last to full is still lagging. And we got a lot of marketing strategies focused on trying to fill those beds, and we expect them to start filling, assuming that the conditions improve or continue to improve, which we are seeing at the moment. So we are seeing a little bit of an uptick, and certainly in the American market. Europe, we've got some good and bad news. We get some surprises, but on a whole, we level out of Europe, which is quite pleasing.
At the same time, you're still operating the luxury space. A very discerning guest. They want the best wine, they want the best food, they want the best guide. So expensive from your perspective, especially when it comes to staffing costs. How do you manage that balance when it comes to ensuring that you offer the best, but at the same time you need to make a profit when sales are sluggish?
Oh, I think we're a very strategic organisation. I mean, I fundamentally believe that if we return every guest happy, being a referral-based business, it's our best marketing effort. So we don't compromise on that at all in the organisation. And a large part of that in our capital, there's our capital down spend at the moment. We don't compromise on what we call defensive capital, being that capital invested to maintain our current level of earnings. The only postponement in capital that we've got at the moment are projects where our tenure has been delivered later than we expected. It's not to say we're not going to do them at all, but we're just not going to do them this year. We're going to move into them next year.
Tell us about those delayed projects.
Well, the one is a program in Namibia, which tenure was secured literally last week, so we just weren't in a position to commit our capital earlier. We expected it to be earlier, but we didn't get the tenure secured. But I'm pleased to report that we have secured the tenure. And the other one is in Zimbabwe. We have a big program in Zimbabwe. We have 9 sites. We've got 5 camps, and we've got big ideas for Zimbabwe. But we just at the moment postponed it until there's more transparency about moving forward. And
very quickly, the DRC. You've opened up 2 new camps there. Is there demand for luxury, safaris in the DRC?
Well, firstly, it's the Republic of Congo. Yeah, we're very excited about it. We've, we opened it in our first season. Although our yield wasn't probably what we expected, we've only got a handful of rooms, bed nights that we haven't sold. So I think it's very much in line with the market expects of Wilderness to go into these wonderful, pristine areas and to open up fantastic product. And we're extremely excited about it.
Well, thank you so much for joining.